This stupid simple scalping strategy consistently gets me days like this and like this. In this video, I'm going to explain exactly how. And I've boiled this down to be so simple that even if you're a beginner, it's going to be difficult for you to mess up. The best part about this strategy, you can use it almost every single day. So I'm going to lay out and explain the exact strategy. Then I'm going to show you this strategy playing out over the past 2 weeks of data in a full backtest, so we can see how much this model would have made and to prove how this model can lead to instant profitability. Okay, so this model is the exact model that I followed actually on yesterday's trade, and I was able to snipe this exact spot on the chart. You can see I locked in $1,700 at that point, was floating $8,800, and all said and done, I was able to make almost $10,000, risking $1,000 on a single trade following this exact model. This is also the model that I'm oftentimes trading in the live trade videos that I put out on YouTube, so you see how it works for me, but the real question is, how can you do it too? So the objective today is how to get results using a proven and simple strategy in just a few hours of work per day. In doing this, I'm going to be showing you this one simple strategy to find and set up these trades. That way there's literally no more guesswork. We're just following the data and focusing on consistent execution. And so that we can follow the data, once we have this exact model locked in, I'm going to put it to the test, and I'm going to run this through a 2-week back test so that we can see exactly how much this strategy made. All right, so let's get into the actual steps of the strategy. Step number 1 is going to be starting between 8 and 9 a.m. New York stock market opens at 9:30. This is where a lot of the volatility is going to rush in. So we want to be able to have our chart hold up. You can see I have this grayed out area to mark between 8 a.m. and 9:30. This is sort of the area where the session is getting started and there's an increase in volatility. If you want access to this indicator as well as the other ones that I'm going to reference in this video, go in the description, follow me on Instagram and DM me the word tools, and I'll give you basically all of my indicators. Step number 2, we're going to make sure that we're between a 1 and a 5 minute time frame. So right now I'm on a 1 minute time frame, which is where we're going to be taking our trades. And what we want to do is identify a trend, and we're going to be following consolidations. So I'm going to click on this trend line tool here, and what I'm looking for are these areas on the chart where we tend to see price continually bouncing off of. You can see we have a downtrend leading into this area where price has now broken through it, and now we have this new uptrend here. So I also want to go ahead and select this trend tool, go to my low here and my high here. So now we're finding key areas where we can potentially get in on brand new trends to be able to ride them in that complete direction. Step number 3 is going to be the most important step, and this is where you really have to pay attention. This is where I'm going to be looking for, number 1, a decisive break with what's called a change of character and a fair value gap. So what we're looking for now is for price to come in contact in closer and closer proximity to this trend and have a decisive push out of that low. You can see this candle kind of broke it. This was the first big candle to push in that direction. Next thing that we're looking for is something called a fair value gap. Now, a fair value gap is where we have a series of 3 candles, 1, 2, 3, where the wick of the first candle isn't overlapping the wick of the third candle. Okay, and we want to see this in close succession to a swing low in our trend or a contact point on this trend where we see a new low being produced. So we can identify this low, price rolls over, has a candle close below it. In my book, this is acting as our change of character. And what I'm really looking for is for this to happen in close proximity to our change of character and our fail of that trend. And it's going to bring us to step number 4. Now we're going to click on this short position tool here, and we're going to be targeting just inside the halfway point of this fair value gap. So once price comes into this midpoint, this is where we can enter our position, set our take profit to be determined down here, and set our stop loss up at this value. This is where one of 2 things is going to happen. Price is either going to push up into our stop loss for a contained risk, or price is going to make a close below this candle here, which is the next thing that we're looking for. So you can see price pushes in our favor. We finally get a candle close below this level. This is where I'm now going to be reducing my stop loss to my break even point, and now we're eliminating risk off the table. Next thing that I want to do is take my take profit and set it to a 1 to 2 risk reward off of our initial risk. I'm going to set a marker here, make sure that my take profit is to be determined, and now I can wait for price to close below that level. And this is where I'm going to be taking off half the position. And now here comes the fun part. We completely reduced our risk down to 0. So now we've locked in 1 full unit of risk, and we've removed all the current risk on our position, and now we can let the trend run. Okay, so as price drops, I'm basically just trend following this down. Every time there's a high produced and a candle to break it, so right here, that's where I'm moving my new stop loss. You can see high produced here, candle breaks it, stop loss gets pushed down to this swing high, price drops even lower, stop loss gets pushed down to this swing high. And in a lot of circumstances, if we get this big of a move, I'll just walk my stop loss down into a space like this and just sort of play into the momentum until price reverses through it and we can close the rest of the position out. You can see on this trade, we were able to make 4.5x what we're risking while reducing risk off the table as we go. This entire move effectively happened in 23 minutes. Okay, and you can see this is the exact type of move that I was able to capture in this trade that I took yesterday. Okay, so now let's go over to all the trading days over the past 2 weeks and play this model out so we can see how much money would have been made over this period. All right, so starting on the first day of the 2-week period, we have our 830 mark here. Price is starting to develop. We have this level broken here, fair value gap with our change of character, stop loss under the candle, 1 to 2 set, buy order set, price fills us. Stop loss goes to break even, half the position comes off the table. Take profit under these swings and then breaks of structure. Price pushes way up, stop loss comes up underneath this candle low, and we close the position. At this point, we also have this trend establishing, price comes down, tests underneath this low level, pushes underneath this low level, change of character area, set up our order, price comes up, fills us. As soon as we get a break below that low, stop loss comes down to break even, half the position comes off table, and then we just let the trade run. Candle closed below here, stop loss walks into here, and we close trade off the table. It's also important to remember sometimes you're not going to have setups. So in a situation like this, we have our New York open, we have market trending in one direction, never really making a full trend break. But that is giving us information to be able to take our trend level along all of these highs and be able to find the exact moment where we break out of a critical level. So now we see price breaking above this trend level, pushing up through it definitively. So we have fair value gap, entry, stop loss under the candle, change of character over that area, 1 to 2 set, create our order, orders filled, stop loss is down here. And this is really important. We need to give the stop loss some wiggle room. So you can see on this candle, I'm putting it comfortably outside of this candle. Now we're waiting for price to break above this high, which is actually at our 1 to 2. So price breaks above it, half position comes off, stop loss is reduced to break even. Stop loss comes underneath this low. And we take the position off the table. Okay, so the next trading day, you can see we kind of trended down here. No real good actual setups in here. Maybe off of this area, which would have been a win. We have this trend development, which here would have been an entry, but would have missed, but would have been a really nice trade. But there are these lows being established along this price action, where we have price starting to melt off, a decisive push underneath that area with a change of character. Fair value gap, midpoint entry. Entry placed here, price reverses down, 1 to 2 hit, half the position off the table. Stop loss reduced to break even. In this case, we almost got stopped out here, but we have a break. So technically stop loss is reduced underneath here. This is a whiplash trade. Realistically, we're out of this trade, left a little bit on the table. Okay, so obviously I'm going over the examples where the trades play out as good examples of the trades. There's going to be losses. There's going to be break evens. There's going to be days where there's no good setups, but even trading with this simple model, altogether, we were able to accumulate $6.6 thousand, risking $1,000 per trade, which would mean if you're risking $100 per trade, it would be $660 in profit, which is typically done pretty easily with about $1,000 on, say, a Bybit or a Blowfin account, which are the exchanges that I use to trade crypto, or with something like a Top Step or Apex account if you're trading on the futures market. Okay, and like I said, this is the boiled down, simple version of the model that I'm showing you. What I wanted to do is be able to show you the proof of concept with this model and how it can allow us to find these entries and play trends out. Now, it's one thing to watch a video, and it's another thing to actually be able to go through the nitty-gritty and fully execute on this. The second thing is, this is a simplified version of the model, whereas usually when I'm trading this, I'm taking between 3 to 5 trades on any given day because I have what are called confluences that give me more opportunities to play my edge. And this is what I go over and share with our private students who have gone through the education. You can see Harry Smith, 32 risk factors on a trade, massive position, making 32x what he's risking. You can see one of our top students, Joe, cleaning up almost every single day, using this exact process to take these high conviction trades. So I basically wanted to share this with you regardless of the amount of money you're starting with. Mastering this process and taking trades where you can make 20, 30x your risk, this is the opportunity at hand with the strategy and why I wanted to share this with you guys. If you want to learn these full models, access to the full education and our trading team, you can check out the resources below this video. Make sure you like this video if you found value. Subscribe to the channel if you want to know when I put videos out. Put another video right here of me trading this strategy live. But until next time, I will see you all in the next video.